Hey guys, this is Irek with Infinite Prosperity Life Trader, and this mini lesson is a part 3 continuation to the original Bear Trap series. In this video, I'm going to break down a very popular trade, Pound Swiss Short from May 24th. It was a trade that a lot of Infinite Prosperity traders took, and they had valid reasons to take it, but it was a bear trap, and there's a very easy way to identify it. I'm going to start off by looking at the daily chart, then I'll continue with the 1 hour and 5 minute. And then lastly, I'll finish off with the 4-hour chart, which is the time frame which actually identifies that this is a bear trap. So let's get to it. And when we look at this daily chart, we can obviously see that the current price action is actually in a bullish trend. So this short trade from May 24th is actually a daily pullback, which is fine. I personally trade daily pullbacks when there's a very good setup, but it is a daily pullback, so you're trading against the current trend, and therefore this to me would only be considered as a power move and not really a hyper trade. So let's break it down. Daily chart, we had this inverted head and shoulder pattern here, then we had this higher low, then we had a breakout which gave us a higher high, and then on May 20th we had this bearish engulfing candle rejecting 1.44 support and resistance area, and then on May 23rd we had continuation to the downside. We had another bearish candle, and therefore on May 24th you could still have a bearish daily direction prediction. The daily chart is pretty good. Let's zoom out and have a better look at that 1.44 level. And it pretty much starts over here. You can see that in 2013 it was rejected once, twice. Then fast forward a little bit to 2015, another rejection, then it became support, and that brings us to current time right now. So overall, it's a pretty decent level with a lot of good rejections, and therefore this was a valid short. Now, the daily chart is good. It does present a potential short opportunity. Now let's have a look at the 1 hour chart and let's see what we had there. So let's zoom in, and you can clearly see the 1 hour chart started a bearish trend. So it broke down here, made a low, pulled back, made a lower high, broke down massively, consolidated a little bit, and then pulled back. The pivot, the 1 hour 50, the descending trend line, all met in that same region, and therefore this could be considered as a short. It is a valid short entry off of the pivot. When we zoom in a little bit, we had a couple doji candles at the pivot there, so overall the pivot is being rejected. Now when we look at the 5-minute chart, again the 5-minute chart right here, we had that breakdown as it was rejecting the pivot. Price finally started to break down at around 5 a.m. GMT or so. It broke the 5-minute 50 EMA after rejecting the pivot, formed those dojis on the 1 hour chart, dropped slightly, and then exploded to the upside, closing anybody who took this trade short for a loss. So overall, the daily was pretty good. The 1 hour chart, it had its confluence factors. It did start a bearish trend. It did pull back to the pivot, and it did have pivot the 1 hour 50 and this descending trend line as support and resistance, and it did form a couple doji candles, and the 5-minute chart did break down below the 5-minute 50 EMA. Overall, yeah, it's a pretty good trade until you look at the 4-hour chart. And this is what we see. So when we look at this 4-hour chart, take a look. Overall, price action is in a bullish trend. It formed that head and shoulder pattern that we saw on the daily chart here, and then after that, it started its current bullish trend, formed a higher high, higher low, and then exploded to the upside here massively, forming a strong higher high. And then as the 1 hour chart started this bearish trend here, the 4-hour chart, all it was just a pullback. Literally, it just started a pullback. After this massive bullish explosion to the upside, the 4-hour chart was just pulling back. There was no bearish price action. There was absolutely zero bearish price action here. The price action was bullish. This was just a pullback on the 4-hour chart. So when we actually zoom in closer, I like to draw my Fibonacci retracement levels because the Fib measures what a good pullback actually is. And in this case, draw our Fib levels. Price started coming really close to this 0.382 Fib. It actually came to the 20 EMA and started decelerating at that 20 EMA. So as it made the strong higher high here, it just started dropping, started decelerating at the 20 EMA, formed a couple of reversal candlesticks, formed a low test, then we had this inside bar, and then we had this bullish engulfing right before the entry here. So right before the entry, to be exact, doji, bullish engulfing, entry short. There is absolutely zero bearish price action and zero bearish candlestick formation. This is a bear trap because the 4-hour chart is in a bullish trend. And when we look at it closer now with the 1-hour chart and 4-hour chart combined together, so although we have on the 1-hour chart, we have that resistance at the pivot, we have the deceleration, we have the candlestick formation, and we have the 5-minute breakdown, take a closer look at it. And this is kind of what happened. So as it dropped here, it consolidated. At this time on the 22nd, 23rd, as it was consolidating here on the 1-hour chart, look what the 4-hour chart was doing. It was sitting at the 20 EMA. It was decelerating at the 20 EMA. Exploded to the upside really quickly and then crashed down massively with the strong bearish engulfing and didn't do anything. It didn't go farther down. That means there is no bearish momentum, because if there was bearish momentum, this would have dropped right after this strong bearish engulfing, but it didn't. It started consolidating right after it again. So we have consolidation, we have a lower high, we have more consolidation. As this is consolidating, the 4-hour chart is making a higher low. Then it pulled back to the pivot. At that point, we have that 4-hour bullish engulfing after the doji gave a bear trap, triggered those short entries off of the pivot, and then exploded to the upside after the 4-hour chart made a higher low and continued with the bullish trend to make another higher high. This is a bear trap because of the 4-hour chart, and that is why I use the 4-hour chart. The main purpose to the 4-hour chart to me is to confirm those daily charts, to confirm those daily setups, but most importantly to avoid these kind of losses by identifying the price action. And in this case, the 4-hour chart was clearly just in a pullback, and at the time of the short entry, the 4-hour chart made a higher low. Now this is pound Swiss. Let's have a look at euro pound, which is correlated to pound Swiss, and see what that pair was doing at around the same time period. And this is it. So when we look at this 1-hour chart on euro pound, it is pretty much identical to pound Swiss. Let's zoom in, and you can see that we have the same price action. Price exploded to the upside, consolidated on the 23rd, pulled back, made a higher low, then exploded again with this bullish engulfing and didn't do anything. It continued with its consolidation. Now, this chart is consolidating at a very key level of 0.775. That is resistance. So pound Swiss doesn't have the resistance, but as you guys can see, the price action, the candlestick formation, everything is identical to pound Swiss. But euro pound is already sitting at support and resistance. When we look at the 4-hour chart, that 0.775 support and resistance level was the previous low. That's the neckline of that daily head and shoulder pattern, and it's clearly seen on the 4-hour chart as well. Left shoulder, head, neckline, right shoulder, breakdown. So when it broke down, it made this strong lower low, and then we had a perfect pullback. So just like on pound Swiss, draw in the Fibonacci retracement levels, and this was a perfect pullback to 0.382 fib and that horizontal support and resistance level of 0.775 and the previous lows. Rejected that area and came crashing down, making another lower low, lower high, lower low. So the bullish trade on euro pound off of the pivot, which is again the exact same thing as pound Swiss, gave us the exact same pullback, same price action, same candlestick formation, rejected the pivot here, gave a false breakout to the upside here on the 5-minute chart, and then came crashing down. So it triggered any bulls in and then came crashing down. And the reason being is there was absolutely zero bullish price action on the 4-hour chart. The 4-hour chart was a perfect break and a retest and a perfect retracement to 0.382. There is no bullish price action. There is no bullish candlestick formation. We have deceleration. After the 1-hour chart rejected that level and it started its breakdown, a lot of the live trader guys actually went short because of that beautiful 4-hour pullback and rejection. So there it is, guys. This is a pretty simple trade broken down. It's pound Swiss short, which many people took. And again, the reason why the trade failed in my eyes is because of the 4-hour chart. The 4-hour chart was just a pullback. So although the 1-hour chart was decent, the daily chart was pretty good. The 5-minute chart offered an entry. There was nothing on the 4-hour chart that actually confirmed this setup. except it did the opposite. So by looking at the 4-hour chart, you should be able to spot that there's absolutely zero bearish price action and that the price action is actually bullish, and therefore there's no point of risking 1% on this setup. So there you have it, guys. This is Pound Swiss short breakdown. It's a mini lesson. It's a part 3 to the original bear trap series. This is just another way of using that 4-hour chart to spot bear traps. In this case, it didn't do anything and formed a higher low. So there you have it, guys. Hope you enjoyed this mini lesson, and I'll chat to you guys next time. Take care.